Not for you. There we go. Yeah, happy Monday. Let me get my Camtasia drawing tool going here. And yeah, and we'll welcome Brent on here shortly as well, which will be fantastic. And all right, here we go. So markets, obviously today we had the big gap up and we've done nothing but trade sideways all day long. Very, very bullish, but kind of an overnight pro gap where there's been really no back and forth or anything like that. If we look at some of the bigger stocks, so we did pick up some Tesla calls Thursday for a quote unquote Friday rally. We did not get a Friday rally, but we are getting a rally today. Is everybody's thinkorswim slow today, or is it just me? Am I special? It seems like it's just been very slow. It's horrid. Okay, good to know. Good to know it's not just me. So Tesla today, just a beautiful squeeze here. We've got the call debit spread that expires this week, and it lost a lot of ground on Friday, but is back in action today. We got the debit spread at 10. Now it's at 12 after having fallen quite a bit. So nice recovery today there. And then just taking a quick look at our other positions, we've got PLTR, and this is more of a butterfly that we're centered around 190. And so now we're already at 190. And as we wait for, I may just have to bring up some TradeStation data. Just kind of hanging out here. So our butterfly is benefiting, but it would also benefit a little bit more from theta decay. So we bought it at 250. We could sell it at 350 today, which ain't bad, but I don't mind giving it a little bit of room for a little smidge of premium decay. We have this as $10 wide up to $200. So that's what we have there. And from there, I want to do a quick look at the SPX and then the Mag 7, and then we're going to talk a little bit about some cool stuff with SpotGamma. So let's take a look at, I got to minimize this. Let's take a quick look here. So the first thing I want to do is take a look at, well, let's look at NDX first, and then we'll look at SPX. So no surprise. So by the way, thinkorswim horrible today, and I may actually just switch over to TradeStation real quick because this is redunculous. Okay, so Nasdaq today, huge squeeze that is built up, just exploding today, and all the Mag 7 are cruising along with it, which is super powerful. So what I'm going to do is I'm going to bring up TradeStation because that is working a lot faster. So sometimes it's good to have some of these redundant relics in your repertoire. And I want to do is just kind of go through the Mag 7 real quick, and then we're going to dive in and take a look at SpotGamma. And for those of you that don't know, SpotGamma has got some really awesome new features coming out. And so we're going to take a look at some of those. Okay, SPX, huge gap up, big squeeze in record territory here. And we've got a Skyline coming up at 6,900. And then you can see today it's essentially, we've got two professional gap ups in a row, which is kind of rare. Doesn't happen very much. So we have a gap up, trade sideways, gap up, trade sideways. I saw some stats on this, and out of the, this has happened maybe like 25 times before, and that said oftentimes that 1 month later, 85% of the time, 1 month later, markets are up from here. Now, the 15% of the time that they were down, it was like a crash. It was, the average down move was like 9%. The way I'm looking at these markets is that this, I don't see that happening. We all know that anything can happen, but the idea here that global liquidity is increasing and that's finding its way into assets, and that continues to happen. All right, let's take a quick look at the Mag 7. Mostly alphabetical order. So Amazon, I think of all the Mag 7 here, Amazon is probably the most non-committal. It's certainly been rallying off of this low from about 215, but it's also when I'm looking at the structure of this, it's just been kind of doing. It's been kind of trading sideways for 6 months, even though that did include new highs. That doesn't mean it's bad. It's just it's not. It's not really it's not an active participant in advancing the indexes at the moment, unlike Apple or Google or some of the other ones. However, it looks pretty solid here. You've got a squeeze, and are we going to be able to make it up to this fire line? Well, the answer is yes, but we don't know, is that something that's going to happen sooner or is that going to be later? And then you have Apple, and Apple was kind of a laggard for a long time. So, while Nvidia and Microsoft were making new highs, Apple was down here and everybody was worried, oh my gosh, this company, all the fun things here. And now here we are at new all-time highs. So now Apple's joining I think it's close to a $4 trillion company. Maybe it is today. Giving Nvidia a run for its money. And then taking a look at Google, which also had been quiet for a while, has exploded on the AI front. And here we are again, new all-time highs in Google. Keep in mind the stock did split 20 for 1. So back in the good old days, this would have been a significant rally indeed of 160 points. Those are always kind of fun. But same thing here. You can see this huge kind of saucer and handle pattern, which is very bullish. And now here we are kind of exploding. Nvidia, of course, one that we all kind of follow. Same thing here. It's had a huge run, catching its breath, squeeze rotation today, and we'll take a look at that in a little bit more depth. Microsoft has been kind of quiet after this huge run into earnings, and now kind of gaining some speed again here too. So that's one thing I've noticed today, is that with this rally and this explosion in new highs, really every Mag 7 is participating in a big way. Tesla, nice consolidation here, beautiful squeeze. The squeeze hasn't even released energy yet, targeting this fire line up here at 500. Oracle's not a Mag 7, but it's a $1 trillion company, or it was. Still like to keep an eye on it here. What I'm watching for is that this momentum can turn and start to work its way higher again. I mean, look, it's come a long way, baby, and it's catching its breath, which is normal. And then last but not least, I want to take a look at AVGO. Beautiful squeeze, targeting the fire line, and then from there, new all-time highs. The other Mag 7, of course, Meta. Meta's been one that's been Meta's a good trading stock because it doesn't seem to have a lot of consolidated lasting moves. It's a lot of back and forth, and it's just kind of good for trading. The moment it looks great, it falls. The moment it looks like it's a disaster, it rallies. But here we are, steadily working our way to new highs. And then the last one on this list, I guess I call this the Mag 10, is PLTR. Eking out new all-time highs today, and then this continues to look really, really good. Now, all that being said, if we bring up SpotGamma on this, and I don't know if you all have seen some of the new features here, but we've got some updated hero flows in terms of how we can read it. And one of the things with SpotGamma is that this is something where, gosh, it's been a couple of years now that we've been working closely with them, with Matt and Brent over there, just because the data here, we've just found it as something like it's a really nice way to look under the hood of what's going on in the markets. And I was talking to them a couple months ago, and they were talking about, hey, we've got like half a dozen new features coming out. Is this something that you guys would be interested in looking at? And the answer to that before he even finished his sentence was yes. And so what I'd like to do today is, I'm going to be taking a look at some SPX, especially as we get into the last 20 minutes or so. But Brent, hey, I see you're on there, and either first welcome, and then B, if you would like to, I'm happy to click on stuff, but it might be easier too if you want to drive and share your screen. If that's also, I could do either one. But would love for you to kind of come on, kind of give your take of the current markets. Maybe we can talk a little bit about the Mag 7 and how they're looking into earnings for the ones that haven't reported yet. And then anything else you'd like to kind of share on the platform.
Hey, it's good to talk to you. It's been a little bit. You and Matt, I know talk often, but it's the first I've talked to in a little while. So hi.
I was going the other day going like, I can't believe it's Halloween 2025 almost. Like, what happened?
The days are flying, man, for sure. But thanks for having me, and I just shared my screen, so if I could
Oh,
drive,
perfect. You
I
want,
think
so I'll nuke mine. So
I'll take
stop.
the pressure off you a little bit.
Thank you.
So the first thing is, I would say is this doesn't have to do with any of the new features we have here at SpotGamma, but maybe one of the best features, and that's Trace. And Trace is so good for looking at zero DT S&P options. And we've been talking so much about this thing called Seek and Destroy, which is this algo where you see these giant zero DT condor trades come in very often, and then what you see is the options flow, specifically this thing called Hero, pushes the market to that strike. And it seems to happen with just amazing consistency. And of course, as I say that today, what I would say is the interesting thing, and the reason I'm bringing this up here is because I'll change the colors a little bit here, so maybe it's a little easier to see. There we go. So the big strike today is this one up here, 68.80. And if you look the third line down there, it says 99th percentile strike. So that's where we know why we know it's a big strike. And what you see is Hero, which is this purple line, it just keeps going kind of up and to the right. And so what I'm thinking for today is, can we do this, right? Can we get there? Feels a little bit stretched with about 45 minutes left in the day, but we've been building up to that, and then this other strike just came in at 68.60, which is probably more the magnet for today. But the reason this is interesting is if you just go back over the course of the day, the kind of complexion of the flow really changed quite a bit. As I just tick all this forward, you see there's the big strikes, right? And then somebody came in and bought a big swath of puts in here. So the day has been a little bit, I think, choppy and a little bit noisy to start the day on the index side. And so I would have expected us to kind of go up to this level. I sort of still think in the back of my mind it's worth like a real small punt, betting in like a call fly or something. You guys are so good at structuring those types of trades, betting that we can get up to that level. But the thing that is more interesting to me is if we look at the single stock flows, and you were talking about some before, and I just want to show you some of those single stock flows.
Hey, Brent, one
Um,
one quick question on
yeah.
Trace, and you don't have to go back there, or you can if you want. So when you see something like that, so you've got the 6880 positive gamma strike, but then you see kind of the larger 6860, I'll call it red, building up. Do you look at that as kind of a tug of war between those two, or how do you interpret that?
This is a little bit of a weird one. So I switched this to net OI, right? So this is by gamma. Now gamma is highest for at the money options, and it increases as you get closer to expiration. So the at the money option, or the closest to the at the money option with like an hour left, is gonna have the most gamma tied to it. And so sometimes if you just go to net OI, it clears it out a little bit. And so when you look at this, what's
Interesting.
expiring
Okay.
today, and this is at zero DTE, right? What's expiring today is at 68.80. We got 19,000 contracts, and it's a spread. You can see it right here is the 85 leg, right? So there's a little bit more. Dealer is long, 20K of those roughly, and short about 12K of these. And then someone came in and bought 8,000 of these puts. Now, the reason that I distinguish here is because if you think about the dealer's position, they're short this put, right? But that put is going to start decaying quite rapidly now, especially if the market holds above this level, right? There's a lot of decay there. And then, these calls are also already really kind of cheap. And so I feel like the dealers incentivize being short this put and long this call. It's basically like synthetic stock, right? And I don't usually think we're going to get some kind of like silly, end of day weird like 15-point rally in the last few minutes. It kind of feels like maybe that's the case here. And the only reason I bring that up is because betting on that being the case now is pretty cheap, right? Like if it costs a whole bunch of money to bet on that, I'm like, I'm not doing that. But if you're talking like 20 cents or something to buy these calls, I'm like, maybe I'll try it out. And if you want to frame what that decay looks like, you can bring it up here. This is called the charm lens. And blue means buying pressure and red means selling pressure. And so you can visualize this as the decay of these options means that dealers in theory have some buying to do into the close, and that is what maybe helps get a little bit of a tailwind here into the end of the day. So the purple strikes, the blue strikes, whatever color you want to call that, I think are pinning strikes, and then the red strikes are usually kind of like invoke volatilities, tend to how I look at them. So like think about pinning versus like just tagging as a support or resistance level if we were to meet there.
Okay.
That's I gave you a much wordier
No,
answer than
I
you were
that's
thinking.
actually great because I've watched that, and you kind of like, you kind of get a sense of like, okay, if this is red, we may test it, not get through it. But I was curious in a situation like this too, just kind of yeah, which one becomes the magnet, and which one's like the kind of the ping pong level.
Yeah, the ping pong level is definitely this one, and it's these 99 percentile strikes that matter. And this trade, the market has really changed a lot today. And the thing I would say that I find a little bit, you know, maybe I don't say concerning, but the thing about this that I feel like is weird is, so number one was, if you look at the total of S&P 500 flow, so this is the same chart we were looking at with Hero before. Let me just delete this little line here. So this is a brand new, we just upgraded this chart. So hopefully it's a lot easier for everyone to see and use. And let me delete some of these indicators. I'll make it really simple. We have 3 billion of inflows in the S&P 500, but do you see the purple line is Hero, right? And the teal line is 0 DTE only for S&P. And those two are perfectly overlined with each other, right? So there's like nothing happening today in the index side that is anything other than 0 DTE. And it's the same thing in the NASDAQ. So like Qs and NDX is pure 0 DTE flow, right? So if you think about like, hey, everyone bought today because of the China news, it kind of doesn't feel like that. It feels like the 0 DT people are just messing around a little bit, and the flows are not very big. You can see we're doing 1.5 today, and we can do as much as 5 billion. But where things are big is in the equity space, like the single stock space. And so this is Hero for today, the purple line. And what I note about this is, number one, it's 3 billion today, and the range, the biggest in the last 30 days is 4, so that's pretty good. And then the other one is, it's a lot of longer dated flow. That purple line really accelerates over the teal line. And anytime I see where longer dated flows are coming in, right? People are buying next week's calls, or a month out, or 2 months out, whatever it is. They're not buying like the shortest dated options. And that to me means that they're making material bets. They're unlikely to close those bets before the end of the day. And so what that matters is dealer exposure, in theory, should remain intact into the future as well. So when I look at something like Tesla, so 3 billion of long, that's really like the driver today. If I look at it, it's the single stock side. As I just mentioned, just want to clear that up. But if we look at Tesla today, for example, you had 2 billion of inflows at the peak today, which is around 460. That's the largest in the last 30 days, but you can see the gap here between the two lines, right? Like, so there's a lot of longer dated call buying, a lot of longer dated flows into Tesla. So even though it's having like a little bit of a, pukey moment here, over the last few moments, like this to me looks pretty bullish for this stock. And those longer dated flows are a pretty good sign. But this is 2 billion, right? Of the total inflows of the equity space is 3 billion. So very concentrated bets today in some really big names. Not so much like the broad market, full on breadth of a rally, right? Which is a little bit weird considering, the market is at all-time highs today. One other thing, just to sort of back that up, hopefully I sort of lost anybody. Surfrider says it's confusing. Like, if you just think about this, Surfrider, just to drive this home for a second, right? Like, if you thought that today was the Trump Z, hey, we have a framework for a deal, and like Qualcomm today, huge rally in Qualcomm. Qualcomm hit 200 today, as you can see here, right? And then it just stopped dead in its tracks. And like the purple line here is people sold a bunch of calls. So if you think about it, if you were like, hey, this Trump Z meeting means that we're going to rally to 7,500 today, you would think a lot of people would be like, I'm going to buy a whole bunch of December calls, for example, right? Or, somehow put on a trade that means that I'm going to make money if this thing keeps rallying into the end of the year. And so when you see these two levels overlaid, right, the 0 DTE and the all expiration flow, they're the same line. That tells me the only thing driving the market today is 0 DTE. So like when I look at the complexity or complexion of the flow, rather, it's like the people trading today are in it today, and then after 4 o'clock, they don't care, right? Whether the market keeps going up or tomorrow's like a whole new session for them. They don't care. It's not like I bought a whole bunch of calls for December at the 7,000 strike and I need this market to keep rallying, right? So those moves can be a little bit transient. And the other thing that I would say about this is that if you look at the implied volatility, you see the VIX is down today. So a lot of people go, well, fear gauge is down, and that makes sense because of Trump and this deal is coming up. But if you look at the change in implied vol from Friday, and that's what this grid is showing you, implied vol is actually higher right now today than it was on Friday's close. And normally what you would expect with this is this grid would be red because you would have look, the Trump sees deals, great deal. Like we have a deal. We don't have anything to worry about anymore. But why would vol be higher, like implied vol be higher? So why that matters to me and the way that I'm looking at the market right now is we have 0DT flows kind of like whacking stuff around. I don't really see people plowing into longer dated stock except for Tesla. And then the volatility space is giving like a real mixed signal around how much I should count on market stability, right? Because if vol is creeping up a little bit, you would inherently think that things aren't quite as stable. So like if I'm thinking about year end right now, it's like, hey, 7,000 is right there. I think we're going to get the Santa Claus rally and we're good to go. But the action in the option space is kind of saying like, we just bought ourselves a couple of days before like a real deal, before the real kind of like fireworks can start to the upside. And now we have kind of this soft underbelly that has me like a little bit nervous, to be honest. So what I'm trying to say is trust, but we need to verify like with the actual handshake and these vols coming down to bet on like they're just being like real strong market into year end. And that's kind of like what all the data is saying to me. And I guess what I would have thought is with the market up 1% and the news about a framework being done and all that sort of stuff, like we'd see a little more breadth to this rally. And I say breadth meaning like, why aren't people buying longer dated index stuff? Why aren't people, buying more things than just Tesla, which seems to be kind of like, the predominant focus in the options market today. So it's a very weird rally today. And I don't think it's one that's particularly stable, and so I'm really watching that angle closely. Sorry, I was checking out the notes there. Oh, thanks, Matt, for popping that stuff in there. I wanted to focus on kind of one other thing that I thought was really interesting about the impact of implied volatility. So I was trading Qualcomm this morning, and I know a lot of people are simpler like to trade options, and John, that's something that you focus on a lot as well. And so I think this is particularly interesting as we look at, we have a new tool coming out called the options calculator. And so what I wanted to do was I took these snapshots, which I just think are really fascinating this morning. So allow me 1 second. Because I think it matters a lot when you are trying to set up trades, right? Particularly when you think about longer data trades. So can you see, hopefully I can open this, this one. Can you see that chart, John?
Yes.
Okay, cool.
That's the chart of the 245 call, or yeah, okay. Yeah,
245 Qualcomm calls. So these were 20% on the money this morning. They were trading for $2, which is like pretty crazy. Like stock was up 15%, right? So this is Qualcomm. And so I was actively trading Qualcomm this morning, and I use Hero all the time in these moments where the flow is really active, right? And so I'll just build this a little bit. And we were talking with the trading group this morning, and this was all sort of a real-time thing. And so I bring that up because this was stuff that we're looking at actively, and I hate when people just use pure hindsight on stuff. So that's why I bring that up. But the purple line here, the line itself is Qualcomm stock price. It ripped to 200. And then the candlestick is Hero. So it's like, what was the flow into Hero? $200 million of inflows in the first like half an hour, basically, to hour, which is a lot, right? And then what you can see is the stock hits 200, and then the flow comes for sale. So people like bought a ton of calls this morning, and then they just started basically selling them. They bought some puts, and then the flow basically has died now, right, with the stock at 190. So one of the cool things I think about this is that when we were trying to track the flow in Hero before, it could sometimes be like a little bit, I don't want to say confusing, but it was a little bit hard to always tell like when the trend was changing. And John, I don't know if you ever really experienced that. Because the flow can be a little bit choppy, right? The options flow. And so one of the cool things you could do,
especially like midday and stuff.
Yeah. So with the new indicator with Hero, what we did is we upgraded this to trading view charts. So now I added a EMA cross. And so the EMA cross is now tracking it's actually a moving average on Hero itself. So I can see now like when a 10-minute of Hero crosses the 30-minute of Hero. So I have a lot more confidence that like the flow is actually turned from bullish to bearish now, which to me has gotten like really helpful because now I'm like, is this the moment where it's done, or is this the moment where it's done? And just like in stock price, you can use the moving averages now or a bunch of other indicators to help decide when that flow has crossed, right? So this is cool. Like, great, I can now see when the flow subsided. But what I did this morning was I knew the calls were expensive, but I was thinking like, okay, the stock could reverse pretty strongly, and so I elected to go for a risk reversal. And when I looked at these calls, they were $2.30. I'm like, wow, that's like pretty rich, right? And this is a situation where you have stock up, vol up, right? Stock is up 15%, and the calls will surge in value because of that, right? Does that make sense? And so what I was like, well, I want to buy a put, right? Because I think that the stock will go down and it could go down a lot. So it's like, let me do the risk reversal where I sell the call and that'll help me fund the put. So then, that's giving me, I'm selling that rich call, but then at the same time, I can buy this put, which I know is a little bit elevated in price because the vol is so high, like because of the stock jump. But by selling that call, I'm offsetting some of that volatility expense. Does that make sense so far?
Yeah, you want to take advantage of. So on something like that, because this is more just kind of from experience, is when you see something like that where it pops up like that, you may not be able to see immediately like, oh yeah, look at it's just kind of like as an options trader, like if there's a spike here, it's like not only is the price increasing obviously in the call, but it's getting more expensive because the implied volatility is spiking up. So you just wanted to take advantage of that.
Yeah, that's exactly right. And so I want to show, because like we built this into this new calculator. So I'm going in a roundabout way of this, but what I'm also bringing up is I use this to like put on this new trade, and I was like, oh, this is a smart trade, Brent. So what I found was interesting here is, so you can see right around in here where these cross, right? It's right around 1050 kind of, and that's where the stock's at its high. And so you can see right in this area, the call is about 80 cents, right? But you can see this, the call made a high of $2.30, which this morning was just crazy. Like the implied vol is so high. And the stock peaked at 1030 and made its first peak here at 1020. So the stock is really peaking in this area where the first high was. But look at the value of the put, which I think is even maybe more interesting. Sorry, I didn't actually add the put on here. Be helpful if I added both both things on here. So open the call twice. Here's the put. So look what happened to the put, even though the stock, like the put was at $9 at the market open, right? And it was still at $7, even though the stock was going higher. So because the vol was like surging so much, the put actually went up in price. And I bought, so right in here, I actually got pretty lucky with when I put the trade on right in this area when we hit 200. And I sold the call and bought the put, but the call value started to come down, but my trade was losing money because the put that I had offset it with went from $5 down to $2, even though the stock was going down at that same time. I'm like, I was ready for this, and that's why I put the risk reversal on. But I was like, gosh, dang it, man! Like that, like that's just like that was a killer, right? And the structure kind of like settled down. But the reason I bring this up is because it's a microcosm of something that happens a lot. Like the vol surged so much so quickly in a short time frame that this really like accelerated a point that I was like trying to make. And it's one that we make in the S&P space all the time. Like, am I buying expensive puts or cheap puts? And you talk about it a lot when you structure butterflies or call flies. I know in the zero DT space, it's always like, hey, do we just buy the outright call for this afternoon because it's, that's the cheapest route? Or do I need to put in like a 1x3x2, like you guys like to do, or different things like that? And so what, this volatility matters, right? Because you can be directionally correct like I was, but for like 20 minutes, I actually lost money even though the stock went down because my timing in the volatility space was off, right? I paid too much for the put is essentially what the deal was. And it took me like an extra 30 minutes for this to correct. So when I look at this, I'm like, I need to optimize next time, the way that I look at this. So it highlights this really important like message. And so why that matters is because this is our new calculator that we launched, and we spent so much time with guys, on your team and structuring trades and all that, but we always felt like it was missing a little bit something. And so I'm sure you have all seen calculators like this in the past. or a chart that looks like this. I mean, this one's a little pretty, but the general idea of like the simple line on your chart, right? And I'll just get to the punch of like why this is so good. If I put in, this is the QCOM call, right? 1128 call. So if we put in the put or the call, whichever one we want to sell, well, let's say we sold a 210 call today, right? Because we're like, hey, the stock has got to take a break. So let's just go the 210 call, and this is what your P&L would generally look like, right? But this is actually going to be incorrect, and this is the way that the market looks at it, because this is using whatever the market vol is right now, right? In other words, it would project what my P&L looked like if my put stayed at this level, but implied vol goes down, right? It doesn't, implied vol doesn't stay the same. And so what it is you need to adjust so that you could be better or more efficient at buying puts or selling calls, which really would have kind of helped my trade a little bit here. So what is different about this is if I now go into the IB settings, and this is for those of you listening, this is a little bit of an advanced topic, but to me, this is the complete difference between being like an amazing trader generating like a ton of alpha versus like struggling a little bit. And like I saw Jonathan Glassberg, he said, I hate when that happens. And I brought up this example this morning because I got caught with it. It's a tricky thing. Like I paid too much, right, for the put, even though I was aware of it. And so what you can do with the calculator is, this is for the 1 month option. This is what the skew looks like for the 1 month option right now. Does that make sense? All right, I'm gonna assume JC agrees and makes sense.
Yeah, I was just looking at I was looking at the smile.
Yeah, this is the smile. So this is what you're paying for a 1 month option. This is what the implied vol is, right? But we know that the implied vol is expensive or high because of the move in the stock, right? Like the vol has come down a lot from where it was this morning, but it's still quite elevated, right? And you can see that because here's the statistical range, the teal bar, right, for the stock. And so the calls are really high today because of the news. So that gap is essentially what is sort of like the result of today's big rally. And so how can I adjust for that? Well, you can move vol down now. So I can move it down 10 points because I want to say, look, I want to be more in the middle of this cone. So now the calculator is going to use, instead of using this top green line for skew, it's going to use the dash line for skew. Does that make sense? So I'm adjusting the value that I can calculate my P&L with on my options trades. So not only can you adjust the IV, but you see how rather than having staying in the whole cone, the teal line is not in the cone. The teal line also has this really big smile, right? And the smile is because everyone's piling into calls because of the news that came out this morning. So what if I think that should also kind of disappear a little bit? I can do this thing here now, which allows me to flatten that skew out as well. I don't know of another way or another calculator. I've never seen one that can allow me to flatten that skew out. And so the reason that this matters now is because when I go to buy a call, I can see the difference between what the market says my P&L is and then what my P&L is going to be if I adjust implied vol the smart or more logical way. Does that make sense? So now if vol comes in like I think it would, rather than me making $600 if the stock rallies, which would be the market IV P&L, I would only make $350. And so you could see also, if you're going to sell this option, how that would be a huge swing in your P&L or a huge difference in your P&L if you're correctly accounting for the change in implied vol and also skew, right? Like it would have been the difference, had I smartly checked this, between sort of being down a little bit here and maybe making some money, because I would have better balanced out, the call that I sold or bought a different put maybe, or adjusted my trade a little bit to account for that IV crush. And so,
Brent, when the day starts, do you have like how much? So as you're using SpotGamma, do you come into the day going like, okay, I'm going to be focused on Qualcomm today because of X, or is it the day starts and you start looking like how do you pinpoint like, okay, this is the stock I'm gonna mess with today?
I personally look for volatility, and I look for names that have liquid options, right? Because that's really important for me. And then the second one is what is really moving and what vol is really moving, because I'm primarily an options trader. But also, all of our data is based on the options market having impact to the stocks, right? So I want to know what names is the options market moving in, because if that options flow is moving things, then I think I have an edge in predicting when that stuff is going to move around. So When I look at this, and this shows up in our morning alerts with big flow alerts, if I went to the morning, you'd see it. And this is a tremendous amount of flow, right, coming into the market, $200 million in 10 minutes. So my system's going off. I can go and look at the vols and know the vols are going crazy. And this is my sort of bread and butter stuff to trade because, again, I think I have an edge on knowing where the big options positions are or the big, shifts are likely to take place, right? And so, identifying these things and then identifying my time frame for a trade and, how I want to position is kind of the second thing. And something like Qualcomm, it's like, I don't know if fundamentally this is going to be, add $100 billion to the stock or not. So I'm in like a very short-term day trade overbought situation because there's so much options flow now piling into the market in short-dated trades that you get like too much volatility on the 0DT or intraday basis, right? And if I can identify when I believe it's options that are driving that, then a mean reversion trade in an intraday trade makes a ton of sense. If you compare that to something like gold took like 2 months to build up like a really overbought condition, right? And so in that case, I look out and I'm like, hey, I'm going to position in like, we were talking about December or January put flies, right? That was the big trade that we put on to try to navigate that kind of situation. So the time frames switch around a little bit, but at the end of the day, it's like, do I have an edge in exploiting the options flows or the vol that is too cheap or too rich? And that's really what I'm looking to exploit.
Yeah, no, that makes a lot of sense. And then on a day like this, where so essentially we get a gap up, and then the market, I don't want to say it does nothing, but it trades sideways. I guess the two questions I have is, if you're looking at the flow, is if you're, I think part of it is if there's a gap up, having the confidence that okay, this thing is going to stay up and it's not going to flush.
Yep.
And so I think that's one of the biggest benefits of the hero flows. 'Cause, when those take a nosedive, it's like, oh gosh, yeah, we need to get out of this. But are there signs that you can see too, like on a day when, not much has happened since the open? I mean, relatively speaking, is what are the things that you look for to say like, okay, this thing has legs?
Yeah. So number one, do I think there's a target above? And in this case, that's why we watch these positions so heavily. Today is only, a 0DT position, like a toggle is on and off. Like the only thing in the market is this one big strike. And in the market's, talking about moving up there. So David in Palm Beach may owe me a beer because he bought something I very, very, I was tepid at best on that 20 cents. David, but so there's this target, right? So that's number one. I see this level, and if you're curious about the seek and destroy thing, if you go to YouTube and look up SpotGamma seek and destroy, I walk through this like really closely. So it's like, is there the target? And this morning, what was interesting is there's essentially there's a condor trade, right? And you can see it here. Right here is one leg of it, and then the other leg is here, right? So it's like, okay, I know I have the market's either going to go down to 68.20 or 68.80 is like the two levels because that's where the big positions are. 68.75 also had a big call position, right? So we had this target zone with the S&P at 68.50. Okay, so I go, okay, those are my targets, and then the second one is which way is the flow leaning today? Had Hero, which is the purple line, sold off, then I'm really watching this. Because this is red, right? Red means selling pressure or just, we call it negative gamma, which means a fluid zone. So there was this like soft underbelly this morning, which was a concern. And I go, okay, I have a target way down here. We could easily hit that, or we're going to go up to this level. Like those were the two places that we're thinking about. And what I'm waiting for is Hero to confirm which direction to lean in, right? And in this case, you'll see the flow in Hero itself was edging to the upside. It was really choppy. And you can see there's some like explosive flow here and it comes back and it was just very, very choppy. But to your point earlier, it was never like a long directional trend in the Hero indicator, but it definitely was indicating, it was trending higher for sure, right? So that gives me more confidence to lean long because to your point, it's like, why is Hero going up? Because people are buying calls and selling puts. Both of that is bullish options order flow. So it's like, great. I would love for it to be much more smooth and trendy just to follow that a little bit better, but I don't have a reason to sell or short when people are buying calls and selling puts. If they're doing the opposite, if they're buying puts hand over fist and Hero's just going down, 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 then I'm going to worry about this bottom strike, right? But the other thing in this market is not only do you have to look at the index flow, but you also have to look at the single stock flow, because single stock flow, as we just mentioned, was really big. So S&P equities, this is the sum, I talked about this before, of all that flow in individual stocks added together, right? So AMD and Tesla and NVIDIA and Johnson and whatever the S&P 500 is, we sum that in this number. And that number is 3.4 billion today. And, we get as high as 4.2 over the last 30 days. So that's a lot of inflow in those top single stocks. So if people are buying the heck out of NVIDIA and Tesla and Apple, S&P is probably going to go up, right? And that's another bullish indicator, which makes me feel comfortable, or makes me feel okay about today being a rally day, right? Because of the fact that, or at least higher on the day, just because I have the target and the flows are they're just bullish flows, right? They're not super bullish, but they're bullish. So why should I short into the face of something like that?
Yeah, and it's always a good, I think it's a good market maxim. Like, there's no reason to get your own face ripped off.
Yeah, that's exactly right. And a lot of times too, and I try to bring this up, like, not all the time, all day long, is there just like, there's the option signal in all these names. Like, sometimes it's just saying, like, the stars don't align for me to do X, Y, or Z. Like, occasionally there's just not a giant strike there to look at and target, right? It just is not there. So it's like, okay, I don't have a view here, right? And that's the kind of thing to think about. Not every day is there this obvious strike to try to target, and we're still about 10 handles away from that, but we can see if we get there. And then the other thing that I watch really closely again is the vols. And here's another thing I just wanted to kind of like show everybody, something to kind of pay attention to, is we have this. I'm in my demo system here, so sorry, I'm getting a little bug. Let me just switch to production. We have the scanners thing. So you mentioned before about, and this is really noisy, so let me just turn this off real quick. We have this scanner thing, and I'll show you some simpler view of this. Is like, what are the names that I can try to target, right? Or what names do I want to trade in? And so often it's about like rich or cheap implied vol, and trying to buy cheap options and sell expensive ones, right? And this also helps to tell you like where the action's in and how the names are moving around, right? So for idea generation, I think that something like this can be really helpful, because the more on the right side of the chart you are, the more overbought calls are, and to the left you have sort of like overbought puts, or the stock is sold off too much oftentimes, right? And so this can be really valuable to help you navigate the stock space and figure out kind of what you want to go into. And so we just built this as we call it the snail trail. And what's cool about the snail trail is you can see how the asset has been shifting over the last 10 days in terms of its options prices. And so gold was making all-time highs here, right? At the same point that put implied vol was the most expensive it's been in the last year. And so that exposes all these really interesting trades you can do. And the move is probably topping out if the IV rank hits 100. So, if the stock is crashing and IV rank's at 100, we probably have max hit the bottom or short-term bottom. And in this case, IV rank is hitting 100 with gold up. And that turned out to be a really great time to start to put on some put structures because of the signals that you're getting here. And what you can see over the next 10 days is, as gold has gone from 410 to now 370, right? It's down about 8%. The implied vol has come down. In other words, the trail is showing us that gold has come down. And now people have been selling puts, right? And I know they're selling puts because now we're moving to the right on this chart. So gold has come down, but the vol's come down, and people are starting to get into calls. So this is now on my radar, something that I may want to swing long because of what I'm seeing in the options space. So it's just another way to really generate some great trading ideas off of what you're seeing in terms of options prices.
Yeah, I like that too. Or if you got a list of stocks and you see something. So if you see something like in the lower right quadrant at the bottom of the screen and far to the right, is it something that, based on what you're saying, is that something you're saying like, okay, this thing is about reached the end? I mean, obviously it could keep going lower, but it's like this is at peak, just as like gold would be at its peak to the upside in the upper
Yeah,
left.
absolutely. And like, so right now, like, what you're thinking about is like, how can I get, for example, cheap exposure to like a year-end stock rally, right? And when you look at all this, like, these names have earnings coming up. So, the IV rank is a little elevated, but people are very bullish into earnings on all these names. It's like, do I want to buy Google calls right now? I know you just mentioned Google, when like, it seems like people have already been buying those up. Like, the IV rank is 50. with earnings coming up, that's pretty elevated, just for a normal day. And the risk reversal rank is 81, which tells me that calls versus puts, right, are more expensive than they've been 81, percent of the time, essentially over the last year. So it's like I kind of missed the boat on buying Google calls at this point. Is there something else I can do? So like Palantir, I see some people talking about that's not too bad, right? MicroStrategy is a big, but and the Qs seem to even be, from a vol perspective, cheaper than say spiders, right, or IWMs. So I can figure out on a relative basis which asset might be, more advantageous to get into. But the other thing to your point earlier is just like when have things just gotten like way too overbought, or oversold, and so I can play mean reversion or look for options exposures in those names. And I think that can be a really handy guide. Even if I'm not trading the options, I just want to find a stock to buy or short, right? Then these options signals can, I think, be very helpful in that space. So the trail again shows you the last 5 or 10 days of history, and you can see how the trails are moving. Like MP Materials, for example, I think off this China news now is going to start tanking, but you got up to this spot where it's like calls were everybody was in this name in calls. IB rank was 100%. It's like you could buy calls at that signal and MP keep going up and you lose money just because the IV rank was telling you options were so expensive, right? And so
and the S&P 500 equities. So these are just some very cool and additional additions to this. And I think one of the biggest things, like with SpotGamma as a tool, and by the way, for those of you that don't know, we do have a discount code. We have a discounted link for this, but it's like I think we're doing a joint webinar together where you're going to talk more in depth about this coming up.
Yeah, and we'll be a little more instructive about some of the things that are happening, with the upgrades and things like that. Today, we just wanted to sort of talk about the markets a little bit and a couple of those ideas. But we have a webinar tomorrow at 11. We're going to talk about our new tools launch, and then I think you and I are on again later this week as well.
Okay, yeah, I'll check my calendar. This is great though. I always love this stuff because what's great about, like, this is a tool I love to use, but what's great about watching you dive into it is seeing how you like to use it, and then I always get ideas from watching how you look at it too. Because so that's always great. So looking forward to taking a look at that stuff too.
Yeah, well, thank you. And I've learned a lot from how you guys trade and structure things, and Henry, and so I love listening to you guys because you open my eyes to a lot of different ideas too. I guess that's the whole point of a trading community, right?
Yeah, no, I think it's great. It's a good win-win that way. And then yeah, and so tomorrow, for those of you that are in here, I'm going to be doing the last day of my live trading for this tick tool class, which we actually integrate pretty closely with the SpotGamma tool. And that's something that's been a lot of fun as well. I think I'll grab the screen here, share real quick if you have not
Yeah,
seen
please do.
this. It's been something that's kind of fun, and even today was actually kind of quiet. But what was fun is about something like this. And let's see. So there we go. Now I'm going to share the screen in the correct room, so that I always find that helps a lot. All right. So what I do on something like this is that we've been trying to figure out a way to kind of get the ticks to be more useful and helpful. And so I found that this works really well with things like hero flows and stuff like this. And so today was kind of an interesting day, but if you look at this, when you get these kind of yellow dots here, it'll show that there's some, real actual selling, in this case in the NYSE. And okay, so we didn't really come down that much, and then it kind of evaporated. And what we found though is on days where you've really got some more back and forth, um, like on a day like this, you can see it's like, man, there's just so much buying here in the tick that this index is going to go nowhere but up. What gets interesting is then when you look back on a kind of a normal back and forth day. And so what I'll find is that I'll kind of watch this and say, okay, say that and this is just hypothetically, say that this was a big purple gamma strike and we're trading down here, and then I start to see the ticks really start to kind of ramp up here like this, and they start lighting up. It just shows pretty heavy buying pressure, and it's like, oh great, well, let's go right up to that gamma strike, and that would be our target. And so that's something we found has been fun too, just kind of utilizing that with all the tools that you guys have created as well.
Oh, cool. Yeah, no, there's so many overlapping kind of like indicators or methodologies that like you can line up these things that work so well with you with the option signals, and I think that's, I mean, from the feedback from people like yourself is always like that's where the greatest ideas come from, is like when I can take these different modalities and kind of match them a little bit, I guess is the thing I'm trying to say.
Yeah, no, that's great. Well, this has been fantastic as per usual, and then yeah, we'll look forward to the additional kind of sessions coming up and all the fun things there. I'm making a note to probably look at taking some type of cheap bearish trade based on that one tool that you showed. The other note I made too is that, because I never really had consciously made that thought, although intuitively it makes sense, is looking for things that are at 100% or 99% or 100% of their range, because it's like, okay, like how much higher can that go? Like you think of that as kind of a rubber band, and so that's interesting as well, and vice versa if it's at 2%.
Yeah, and the nice thing about that is that you can take the emotions out of it in some ways, because like gold, like how do I know when gold? I don't know anything about geopolitical risk and macro, this or that other thing, but I know when options are like extremely expensive or not, right? And so there's no guarantees in trading. But if I know that the options market's like screaming overbought, then like I have a little more confidence versus sort of like trying to wade into the geopolitical waters of analysis or whatever. So like that. And the same thing with single stocks is like you can find when options are expensive, and that doesn't necessarily have to say anything about the price of the underlying stock, right? It's just like people are trying to pay too much or not pay enough for bets in a name using calls or puts, and there's a great signal in that.
Well, and there's something to be said too, just for the idea of you don't really need to know what's happening in the news because the market is actually telling you everything you need to know. And I think that's something
Mm-hmm.
that's you don't necessarily understand that I think at the beginning of a trading journey because it's always like, what's the news? What's the news? Well, look, the market knows, and by the time we hear it, we're the last in line. And so it is things like looking at measures of order flow or what's the option premium range here or the IV range. There's things like that that essentially kind of are gathering all that information for you in real time, and it's just learning how to kind of understand and interpret that data.
Yeah, 100%. And I think the options prices at the extremes are essentially emotions, right? When you get an IV rank of 100, it's like people are, like retail is way too aggressive, right? Or way too bearish, or there's like margin calls or something that. Those are the moments where you just hit like an emotional extreme. And I think in trading, like the best trades are always made when the emotions are at the extremes, be it bullishness or bearishness, and betting kind of like on that mean reversion, or like those are generally my favorite trades.
Yeah, no, and that's a great. I mean, yeah, it's at the moment like when everybody's at their max. If everyone's at especially like at 100% IV range, if you think of that as everyone, if everybody wants that stock, what happens when the last person that wants that stock
Yeah.
is that when there's no buyers left, right? And man, the abrupt turns on something like that can be amazing.
Yeah, and are people? It's like whether you're buying Furbies or houses or Beanie Babies or whatever. It's like it's the same thing. Like emotions push those prices to just ridiculous levels, and in the option space, it's the same thing. You could just only IV implied vol is like what the measure is, and so it's giving you a pretty clear-headed statistical assessment of bullishness or bearishness, and so I found that to be really valuable.
No, it's good stuff. And I think what's even great too is because this market there's so much information, even more so now. It seems like every year there's always more and more things to kind of keep in mind.
Hmm.
Just the idea of, really simplifying things like this and just like, well, if I just look at these three pieces of data and you can catch up on the news later. And then that way it's just, a lot of times in trading, it's not knowing everything. It's just finding a niche and kind of, I don't like to use the word exploit because it's not really exploiting it. It's just using your knowledge to continue to be on kind of trending on the right side of the market. And that could be as simple as, if retail traders have gotten so aggressive that they've pushed up the implied volatility to 100% of the annual range, yeah, maybe that is kind of taking advantage of them, but at least you're doing it in an objective way. And the beauty of options, I always like the beauty of options is that if something's so extreme and you're like, man, I wish I had that, I'd be taking profits here. Well, you can still sell calls here. You're just, sell them obviously as a spread. And now you're just essentially you're initiating a call credit spread where you would have taken profits if you were long. And
Hmm.
I think that's something to kind of look at too is, if you look at something that's a sell signal and if you don't own the stock, well, you can still sell.
Yeah, yeah, 100%. And I think that's the dynamics that options give you, options trading. And I know a lot of people haven't maybe waded into that, but I think you get so many. It's just a whole other dimension. It's the volatility dimension that's so valuable to. I like to use the word exploit. Exploit,
Yeah, I'm not against
exploit
it.
a
So
different
yeah,
dimension.
I think it's for a good cause. It's like it's the markets were made
Yeah.
essentially for
But the other
exploitation.
and the other thing about news that's so interesting now is that it used to be like the reaction to the news was more important than the news itself. Like the famous saying, right? Where like is that a big headline or not? And like, well, how do people react to it, and how does price react to it? And what I think is interesting now is that I think that the reaction to news is like can oftentimes be magnitudes more extreme than is warranted by the news itself. And so what happens is like to the deep seek thing, Everybody thought Nvidia basically as a business was over based on the fact that it dropped 14% in like a minute, right? It was like the biggest market cap loss in history until the Tesla Elon tweet was the biggest market cap loss in
Right.
history. And so everyone's like, this is the end of the day, end of the world. And it's like front page Wall Street Journal. And if the stock was down 1% on that, like no one on CNBC would probably even mentioned it, right? Like it was like, it would be an afterthought. But because the stock is down 15%, people are like, this is a huge deal. But maybe it's not a huge deal because these instruments or these stocks are so levered up with options and derivatives that they're just having these volatility spasms, just like on the 10th one, like a basic Trump tweet about his China dealings, right, drops the market by 3%. It's like Trump's been tweeting stuff like that for 9 months now, right?
Yeah,
Like,
it's from day one.
yeah, and people have gotten very used to that. So like, it doesn't really make sense that VIX will go to 30 when he's like, starting to play hardball with China like a couple weeks before negotiations. Like we've seen this before. Like it's not really that big of a deal. But everything just gets so extreme in the derivative space that you just can't have like a gentle unwinding of these things. It's like there's just a lot more violence now, I guess, in price action.
I like the idea that there are no more gentle unwindings. I mean, that makes a lot of sense.
That's what it feels like.
This is anyway, there's probably a lot of analogies we could use there that I'll probably just stop now on my head. Um, well, I think this is great. I mean, I love talking about this stuff. I think the rest of this week is going to be fascinating. We got the big gap up on Friday, big gap up today, and we're kind of cruising into end of the month and all the fun things. So it won't be a dull week.
Yeah, it'll be a lot of fun, a lot of Mag 7 earnings, and then we do have the open house. So if you go to, I know the link has been in there, so you can anyone who's interested sign up there, and you'll get access to the open house, and you can try out all the tools and see how they work for you. And we'd love to have you join the SpotGamma community, and then we'll keep taking these JC and Henry trades and paying for those subscriptions.
Yeah, no, it sounds good. Sounds like a plan.
And thank you so much for your time today. I appreciate it. It was fun to connect with you again, and we'll be talking to y'all soon.
Yeah, Brent, good hanging out as always. And we'll touch base soon.